Rajiv has got a question there around Ipswich, a lot of new subdivisions, new housing coming in. Does this mean there will be downward pressure on pricing and how this may affect houses already purchased? Look, it's a really good question, and I might answer it in a couple of ways. I'll just bring up the map of Ipswich. So Ipswich has been a market which has gone really, grown really strongly on a national level for 2 to 3 years, fallen back to average, and then really grown again. So it's been a long-term stayer. One of my favourites where you've had an entrepreneurial council. It's in a really unique pocket, 25, 30 kilometres from the Brisbane CBD, with good access points, etc. But you've got to remember, so you have, river. You have Brisbane up here, you have train line, generally very good utility and access points into Brisbane, but you have all of this area here with new supply. Now, yes, it is closer to Brisbane as the crow flies, but you are starting to gap away from the train line, which is how you get into Brisbane CBD. This is as close. This train station here is the same distance as the Kalangar Moreton Bay train station and very similar and comparable to Logan. All right, so those of you that think that Ipswich is separate, it's definitely part of Brisbane and it's very very accessible to Brisbane. It's 25 k's along the train to the Brisbane CBD, same as Kalangar, right? This train line extends all the way up through here right into Ipswich. So a very strong driver of utility, as is the scarcity associated with the flood zoning around the river. So all this is out of bounds. So you have a natural compression of that utility running along the train line. But then you have all of this new supply, and also new supply up here in Brazil, etc., down here in Churchill. Ipswich has been surrounded by new supply. So I guess Rajiv's question there, is that a bad thing? Is that going to have downward pressure on property prices? Well, this has been happening now for decades. 15, 20 years you've had all of these areas being built out. And what's it done for property prices? Ipswich has continued to push and push and push and push. And not all areas, but the areas where we select and we see the data time and time again, every few years just become outstanding on a national level. It keeps happening whilst all of this new supply is being built around it. Now remember, if you have the strong intrinsic drivers of utility, and it is very close to the centre of that onion, the more supply around it sometimes can be a positive thing, especially if you have flood zones, etc., train lines who are compressing that demand into a smaller channel. So we've typically done really well in places that are closer into Ipswich CBD, closer into train lines, closer in along that train line towards Brisbane. And we continue with all of this new supply generally being built further out, it rolling the demand inwards, and it's making these places with more appeal, right? As the population moves in and it suddenly becomes a little bit of a commute to get to your job in Ipswich CBD because there's some good employment around there, then people might start thinking, hey, I'd love that nice property that I just keep driving past in Eastern Heights, nice older Queenslander, beautifully presented. They keep looking at it, and all of this rolls inwards. So we've generally stuck in very close to the Ipswich CBD or along the train line, and you have to pick your moments. It's a very strong long-term buy, okay? Very strong long-term buy in the Ipswich market, but it does come in and out of our buying window, usually every 2 to 3 years.